Good day, everyone. I'm Gangster, and on today's topic, our section, we're going to be talking about technical analysis. Now, based on our the video we did the last time, I told us that that previous video was very quite similar to technical analysis. I think we talked about chart patterns. So basically, what is technical analysis? We have here that technical analysis is a way of predicting future price movements in the market by analyzing past price patterns and trends. Right. So if you guys remember in the last section, in the last video, I told you guys how we could, identify trends. So by identifying trends simply, you're trying to predict what, the next movement. You're going to be in anticipation of, the next movement that the markets would, make. So your job as a technical analyst is to know how to correctly predict the market's movement. Right. So we have the four basics technical analysis, like things you should consider, when, as a technical analyst. So price, we have volume, we have time, we have sentiment. So price basically, if you look at this part of the screen, this is price. This is AUD card, AUD to dollar card price. So it basically involves this price. I think the current price action should be around I think it's around here 0.89 644. So that's price. One thing to consider. You can consider what price is. The other one is volume. So basically, volume is is the measure of the numbers of shares traded, indicating the strength of a price movement. So basically, a lot of traders use the volume. They use the volume. I think you can use that as an indicator. So many of them use the volume indicator. It basically tells them that there's a lot of buying or selling in the market at that time, so they know how to position themselves, right? So we have time. That's the third one. Um, so basically, in forex, as a retail trader, we all know that there are different time frames. We have the weekly, we have the monthly, we have the daily, we have the 4H time frame, we have the 1 hour time frame, 30 minutes, 15 minutes, down to the 1 minute time frame. So time plays a very crucial role as a technical analyst. So we have sentiment. So basically, sentiment is, where the market is at the point. Is it uptrending? Is it bullish? Is it bearish? So all these things I've listed above, play a very key role as a technical analyst. So you have to understand all of these things that I've listed on the screen. But many traders don't necessarily use the volume indicator, but they still do, a great job. So I would this video is going to be divided into two parts because this is a more practical video, right? I'll be using the line charts here as a few examples, but in the part two, we'll be going delving more into the chart, right? So basically, as a forex trader or a technical analyst, you want to define what kind of trader you are, right? So as we all know, there are so many kinds of forex traders. There are the swing traders, we have the scalpers, we have, you know, different other kinds of traders, right? So swing traders basically are the ones that trade from 4H. Scalpers are the ones that trade 15. Scalpers are the ones that trade from any time frame within 5 minutes and 1 minute. So first off, you want to know the kind of trader that you are. I'm a day trader, right? I don't use these huge time frames. I don't spend so long in the market. I just look at the higher time frame and I, enter the 15 minutes, do a very few analysis and I take my entry in the 15 minutes, right? So that is fine. I've defined what kind of trader I am. I'm a day trader. All right. So now the next thing that I want to consider as part of my plan as a forex trader is I want to consider the bias of the forex market. Right. So let's leave this image aside now. Let's just say I enter the forex market one New York section or Asian section, right? And I see the market in bullish move. This bullish move. What will be the first thing that comes in mind? Oh, AUD card is bullish. Where do I AUD card is bullish. Where do I take my buy entries? Because basically, when we're in a bullish trend, we look for buys. When we're in a bearish trend, we look for sells. So basically, for many of us that doesn't know what bullish means it's a way we term a market that is in an upside. So this is an upside market. Price is going up, and everywhere is good. So the first thing I look out for is how to place a buy position. So the first thing I've been able to identify is that I'm a day trader, right? Second thing is sentiment. Where is the market headed? The market is in a bullish um rally. Now the third thing you want to consider is your entries, right? So this everything I've mentioned now all encompasses the components of being a technical analyst. So the next thing I want to look for now is my entry. So I know the basic concepts of the market, buy low and sell high. So now that we're in an uptrend, I'll be looking at these key levels for my sell entries. These key levels. And in our next video, we'll talk more about. I think I've made a couple of videos already on my video course and on YouTube here. So we'll talk about order blocks, order flows. So these are key levels in the market where I want to be taking myself. So in actual sense, this rally would have just extended its leg down. Sorry, would have just extended its leg down here. I know that I'm taking my buy position here, right? So I automatically know that when price retraces, okay, let's not make it let's not confuse you guys. So in the beginning, I said if you watch the previous video, I made mention of something. I said an uptrend consists with a series of higher highs and higher lows, higher highs, higher high, higher low, higher high, higher low. So we're looking at it's just this thing that we're always or invariably looking at buying at the higher low, right? So if you look at it in what I've just said, I know that after let's take this down. I know that we're on an uptrend now, right? I know that after every break of structure, this is the new break of structure. This new leg now broke this leg, right? I know that after every break of structure, as we bind at this new lower high, so price retraces again to the downside. I buy here. That is, there are so many things to consider after taking an entry. I'm just saying this because I'm trying to like explain basically. There are so many things to consider. First, there has to be an order block here, and the order block actually does have to be unmitigated. That's where imbalance comes in. FVG. Some people know that as FVG, that's inefficient price action. A lot of other things that you guys are going to learn along the way. So we have a new break of structure here. This leg here broke this leg, right? This top. So we have this series of higher highs, higher low. You'll be anticipating on buying on the next higher low. There's always going to be an unmitigated order block at this leg here. So I'm going to mark it out in a second now for us. So we have this like this. When price breaks, when price makes a new break of structure, we call this break of structure BOS. When price makes a break of structure like this, when price makes a new break of structure, we know that price would always head down to the while price is about to make a new lower high, price would always come all the way to tap here. That's how we know that we are going to buy here, set our target profits up here, this next leg here. Then price breaks it and keeps iterating the process. This is how we make money as technical analysts in the market. Price makes a new higher high here, breaks this previous high, right? And now let's imagine price is here. Price is coming all the way now to do what? To tap again. You just basically iterating this process. Iterating this process of higher highs and higher lows. So we have this when price starts here, you take your buy from this point here. price goes up the way again. It's really the same process of, breaking this recent high here. And it breaks, we've made money on this move here because we're taking our profits at this leg, at this point here. The markets break again, come all the way down. You take a buy entry here, you mark it out like this. You take a buy entry here, price stops on it, you know, price stops on it, and there's a you go long, make money, just keep iterating the whole process of buying and buying and buying. The same thing goes or applies in a downtrend. When we have a downtrend, so we want to what? Want to be selling. So I also made mention of this. I said this in the last class that a downtrend consists simply of a series of lower highs, lower low. So when price retraces to make a new lower high, what happens? We sell. There's always an unmitigated order block here. When price retraces all the way, we sell at this point here, right? Price breaks this previous low and makes a new low and a new high. Price goes all the way to tap on our unmitigated order block here like this. We take an entry, we sell here, and we just keep iterating the whole process. Price makes a new lower high, price retraces to the upside, tap on an unmitigated order block. It's just the opposite of what we did here. Here we are buying at the bottom, here we are selling at the top, right? So like this, you just keep iterating the whole process. I'm going to go into more details in our next video. I'm going to take us to our chart. I don't want to overwhelm us. So here like this, before this move, right, we'll just mark here like this and say, okay, after this break of structure here, because it's actually a break of structure here. There's a break of structure here like this. I made a video about order blocks, by the way. You guys should check it out on my page. It's on my YouTube here. It's on YouTube here. You guys should take your time and check it out. So there's a break of structure here where, because price initially was already coming from the downside like this, like this. Alright. Alright. Break this structure here. Move all the way down. Tap on this unmitigated order block. This bearish unmitigated order block. Sell again all the way. Breaks this structure. Break this structure. Calm down. You make money on this move here like this after selling. Price retraces again and just keeps iterating the whole series of lower highs and lower lows and lower highs, and you just keep making money. That is if you're smart enough though, because this like this, price stops on this, we sell, right? So as I said before, this video is going to be divided into different parts. We might even have a part 3 because there's a lot of things that technical analysis encompasses, because we will have to start talking about entry models, and entry models in itself. There are so many kinds of entry model. This entry model is an entry model without inducements. Now, if you watch my earliest videos on my YouTube, you'll see where I talk about how to properly map structure. About how to I talked about how to properly map structure, right? How to properly identify a valid break of structure, a valid change of character, and all of that, right? Okay, so this will be the end of this section. In the next section, I'll be taking us straight to the chart, and I'll show you guys more practically there what a bullish sell setup looks like and what a bearish sell setup looks like. So until then, guys, take care.